Buddy, it is Wednesday the 18th, and the market saw a pretty strong sell off here again today, which should never take anyone by surprise because we're in a primary downtrend. We had been bouncing and we were above the 5 day moving average, but the primary trend is what we need to stay focused on and have one foot out the door if you are trading the long side in a downtrending market. Even when the intermediate term trend is higher, like it had been, it came into an important level that we had been talking about. Today it gapped lower and there was no sign of buyers. People who have been trained to buy the dip got, I think, exactly what they deserve for buying weakness. And you deserve to lose money when you fight the trend. That's just the way it goes. A trend once established is more likely to continue than reverse. I used to be the type of guy who would think it was down too much and try to buy and take advantage of these little rallies in here. But again, the path of least resistance is lower when it's below the daily volume weighted average price. Now we have a 5 day moving average that is turning lower again. So that looks like from the failed move higher came another fast move lower. It seems highly likely that we will test and most likely undercut this volume weighted average price that we've had our eye on from the COVID low. After that, of course, we have the volume weighted average price from this peak. And, we won't go into the bigger, longer term ones, but if the market continues lower, then we'll continue to identify other levels. The 38.2% retracement of the S&P 500 brings it down to this level, which is approximately 381. That's a level of interest, as is about 373, the volume weighted average price prior from the peak prior to the COVID. Now, the NASDAQ, of course, has had a much worse sell off. In this market, we're now looking at the possibility of the volume weighted average price from the 2019 low. So that means that the average long participant, average long buyer, is involved, weighted for volume at about this level here, 282-ish. The average short over that period of time is involved there as well. So there's price memory there. It doesn't necessarily mean, as always, that it will be support, but as we saw earlier in the year, the first bounce off of the volume weighted average price from the COVID low saw quite a vigorous bounce right up to the conjunction of the 50 and 200-day moving average, and it's been straight lower since there. 1, 2, 3, 4, 5, 6, 7 weeks in a row now. So the path of least resistance is lower. We're in a bear market. The S&P 500 they say isn't in a bear market. It's a foolish measurement anyway. There's no point in saying bull market or bear market. What's the path of least resistance for the average stock? And that is lower. This is what I was talking about with subscribers midday, that if we saw a bounce off the volume weighted average price from last week's low, that it might be trapped under the week to date VWAP and then continue lower. Instead, it just continued lower. And again, the path of least resistance is lower. To try to buy into this weakness makes no sense. When it's below a declining volume weighted average price, you'll see some rallies that do take it up to there, back up to test the VWAP. But today you can see how weak this market was. It never was, less than about 2 points below the volume weighted average price for the day, and we closed much weaker. So where does this leave us for tomorrow? Well, it seems likely to me that tomorrow we might, see even a gap higher and then a rollover and continuation lower. Again, the path of least resistance is lower. Keep an eye on today's volume weighted average price tomorrow. That becomes the 2 day. It's not a full 2 days, of course, but it's the second day volume weighted average price. If we're talking about this market at 10 a.m. tomorrow morning, that means 30 minutes into the day. Add that to the 390 minutes the market is open today. Well, at 10 o'clock, it would be a 420-minute volume weighted average price. At 10:01, it would be a 421. But it's yesterday plus whatever occurs, today basically. Tomorrow's volume weighted average price, let's say the 2 day does this, and then it gaps up, and then tomorrow's volume weighted average price looks like this. This is the place I would be looking for a short sale. I wouldn't try to short on the way up because maybe it just keeps going higher. Who knows? I certainly don't. I want confirmation that when it rolls over, that's when I want to short it. And then I have a logical place to set my stop above the most recent relevant lower high, which I think would be right around that area. It's not a prediction, it's a potential scenario, as always. The Russell 2000, as we know, bounced perfectly from that prior band of resistance, which was also a 50% retracement of the COVID low to the the all-time high. And we're still in here. I was thinking maybe we have the potential to continue up to the 20-day moving average and the volume weighted average price off of this peak right here. That's that purple volume weighted average price. Instead, we saw the same thing we saw in the other markets. We saw a gap lower. It tried to hold the month to date volume weighted average price very briefly. Uh, that's where the initial bounce came. And then as it broke below that and the daily volume weighted average price, that's where the sellers regained control and kept that control throughout the session. So again, tomorrow, maybe we see something like this. And if it just continues to go higher, well, there's no reason to sell short. But if it gets stuck around that 2-day volume weighted average price and that 5-day moving average, which will start to do something like this, then we want to short it on the way down. Don't short the rips. Don't buy the dips, short strength after the rip, and then manage risk with a tight stop. That's the way I've always been talking about it. Some people say, "Oh, ha ha ha! You told me not to, buy the dips, 5 years ago, 3 years ago," and it's always the same. Don't buy the dips. Even if you're a longer term investor, there's no reason to look at a company like Walmart and say, "Hey, it's a good company. It's down too much." If you bought the dip yesterday, well, where's that get you? Down 10 points today. And Walmart continues to be weak. There's no reason to buy stocks in downtrends. Let them settle out. Let the institutions do the dirty work of creating the support. The semiconductors couldn't make it up to the volume weighted average price from that prior peak. That's this purple line right here. And we continued lower here as well. This market, same story as all of them. I would be looking at it as if it rallies up towards that volume weighted average price from today plus whatever level we're at tomorrow, and then we get below tomorrow's volume weighted average price, this is the place to short with a stop above the most recent relevant lower high. Maybe it's that level. Maybe you decide, hey, I'm going to put my stop above there. Maybe you say you're going to put your stop up there. It's your money. I'm never here to tell anyone what to do. I'm here to give you guidance and say, here's how the market works. It's not about predictions. It's always about the same thing, which is to manage risk. And the proper way to do that is to get involved when the momentum is in your favor at the lowest risk point possible. The biotechs came down to their month-to-date VWAP and the 5-day moving average. So relatively speaking, it was stronger today. But instead, so what does relative strength mean? It means it sucks less than the rest of the market. It's not a victory to be down like this and lose less than the market. If you're interested in absolute returns, then you trade for profits. Now, it's holding up a little bit better, but it doesn't mean it's made a low, it's at a low, or it's going to turn around. It means just leave it alone. Wait for evidence that the buyers are back in control. Financial stocks, again, as I've been saying over and over again, most of the stocks that look like this, whether they're an index like the financials, if they're below the 20 and the 50 and the 200-day moving average and they haven't tested the COVID low yet, they most likely will. There's a lot of stocks set up like that. DFS, I think, is likely to go down to that level. ESI is one. FAST is going to do it most likely. FTNT. Those are some of the names that I'm looking at for subscribers to Alpha Trends. As I mentioned over the weekend, I am running a sale on Alpha Trends. It's a great deal. Take a look at alphatrends.net. All the details are there. I'm not here to give you the hard sell, but if you're interested in changing the way you look at the market, here we are, just finished the 100th day of this year. We've still got, 152 or so days left in the market this year. If you're looking to make money, then at least take a 2-week trial and see if I can teach you to do something different if you're losing money.